how will the money flow? How will copyright work? There's all sorts of interesting questions that you can kind of think of downstream. And I think those are all questions that in some ways crypto can address.
They have the leading, state-of-the-art models in Gemini across a bunch of different domains.
So what should they do? They should throw out search at 100-something billion in revenue?
Yeah, it's the best business out there, and I do not envy them.
There's like all these people talking about, P-Doom and, Terminator stuff, and then they're talking about models. They're sort of either really, really tactical or really like cosmological scale or something. But my sense is a lot of the actual interesting questions are sort of in the middle.
Chris, obviously you spend the vast majority of your time in crypto.
Yep.
Why don't you just start by saying what is the state of, talk about what the state of crypto is today, where are we at? What's most important?
Yeah, people probably know the last 4 years have been a tricky time on the kind of the regulatory policy side, and so that's really kind of set us back a little bit. But on the positive side, the infrastructure has gotten much better. One of the big goals was to be able to send money for under 1 penny in under 1 second. And that is now achievable. If you download like the Coinbase wallet, for example, you can do that. A couple of years ago, that was like $10 or something like this. So that's great. So the sort of core blockchain infrastructure has gotten much better. For those tracking it, like stablecoins have grown dramatically in usage. It's now in the trillions of dollars, higher than Visa per month.
Yeah.
So that's been really good, and that's, by the way, not correlated to kind of trading volume and things. So it's not sort of speculative use cases. It seems like real use cases. So that's been great.
Talk about some of the use cases, some of the maybe stable coins. Double click for a second.
Yeah.
I think you called it, WhatsApp moment for money. Like, what do you mean by that? And what are some of the big use cases?
Yeah, I mean, the way I've been sort of, at least in when we go to DC, for example, explaining blockchains and stablecoins is it's essentially digital services where you remove the intermediaries. So you can instead of having to send money through, having a issuing bank and a merchant bank and Visa and a payment processor, you have a blockchain, but it's essentially acting like a service provider without intermediate, like it's very lightweight intermediaries. And so in the same sense that like WhatsApp, came along when you had to use like SMS, and you'd pay for international payments, and there were like all of these little it wasn't really one network, it was a whole bunch of like sub networks. And you had WhatsApp and other kind of over-the-top networks, which created a single unified network. And so you can kind of think of stablecoins as you're creating a single global unified network without intermediaries that allow you to make payments, right? And that turns out, once you get the infrastructure down to 1 penny, 1 second, it turns out to be it's been quite popular and useful. And so that's really exciting, and hopefully, for those following it, we're trying to get legislation, and that will, I think, further accelerate it, because you've got essentially, 99, think of it as it's a network effect, and you've got 90 or high percent or some percentage of the nodes on the network that right now don't feel like they can participate in the network, so like banks and other kinds of more conservative financial institutions. And once we have legislation, that will unlock that, they'll join in, that will accelerate the network effect. And then the exciting thing about the stablecoin thing, right, it's like, the next thing, once you have money flowing through it, well, why not loans? Why not stocks? Why not treasury bills? And so it's sort of a stepping stone to a whole bunch of other things. So that's been very positive. The negative side, as I mentioned, on the regulatory side, we had this, all-out assault by the last administration on the space, and that just had all of these negative effects. Essentially, we lost 4 years or something, I would say, in a lot of ways. And that not only did it mean that the projects that were invested in had to really kind of limit their product development, but it also, I think, scared off a lot of entrepreneurs from even entering the space. And so we're sort of recovering from that now. I think all things considered, given that, like, we're in a really good spot, given all the drama of the last 4 years.
Yeah, absolutely. Yeah, I mean, the stablecoin thing, to me, is one of the, one of the items that has become sort of mainstream in the crypto world now, or is starting to become mainstream. Like, for those of you who followed last week, Stripe had their big product conference, and one of the big things they talked about, they did their biggest acquisition ever. They bought a stablecoin company, and it was a big part, one of the biggest parts of what they spoke about in terms of product advancements and their focus areas. So, quite optimistic with you on that.
Yeah, they spent quite a bit of their time, and for those who don't know, like Stripe has a mixed history with crypto. They got into it a long time ago. They co-created a project called Stellar, and then they got really kind of down on it for a long time. It wasn't working. And now, if you watch them on various podcasts and in their demo day, like they're very, very excited. A lot of their use cases are cross-border. They're like treasury management. So that's like, I think like, like SpaceX, like Starlink is like, uses it to move money from one country to another, things like this.
People they have to contract or they have to pay in different countries is the simplest way to actually pay them.
But there's all these sort of secondary benefits, right? It's not just the price, it's not just the lower pricing. It's also the fact that you can now, it's fully programmable. And so, for example, a big problem is invoice fraud. People send, you send bank wire information in a PDF and it's wrong, but if it's all fully programmable, you can build essentially like a reputation system and fully automate the full thing and have a whitelist system and all the kind of modern bells and whistles you want to have. So that's exciting, and I'm hoping that's, as I mentioned, kind of a stepping stone to many other kind of we have obviously a lot of speculative use cases in crypto, but what we really want are non-speculative use cases, right? Things that are like real products that aren't around trading and things, and so that's been a bright spot.
Yeah, that stat of stablecoin volume from the previous year, I couldn't believe it when I read it, but to be at the same level of Visa is extraordinary, so quite optimistic. Let's shift gears, so let's talk about Gen AI. Maybe to start, just what are your initial impressions as a student of technology?
Yeah, I mean, for those of us who've been, who've been in technology for a long time, as I have, it's amazing to see. I mean, it's obviously incredible, and it's particularly AI, because AI has been 80 years or so of development and has gone through waves and really kind of became, kind of roll your eyes at some point. People would often roll their eyes in the 2000s and 2010s, of AI, just because it had been around so long and hadn't really lived up to its promises. I mean, people in the 50s and 60s were saying, there's a 1960s, there was an expert system, actual stock market kind of bubble, So to finally see it work is amazing, and in some ways it's interesting with technology, right? Because in some ways it's predictable, in some ways it's unpredictable. The predictable part, if you go back and look at like Ray Kurzweil's books from like the 20 years ago, like a lot, and there were a bunch of other examples. They would have these charts where they would plot out the kind of the Moore's law type improvement in GPUs, and then compare it to like a human. How many nodes would you have? How many parameters in your model, and how does that compare to like I remember there's one in like the deep learning textbook, and it's like how does that compare to a bird and a human? And like I was just looking, someone was just talking about the Ray Kurzweil one. Apparently he predicted like AGI in like 2027. Like they were a lot of these predictions were fairly accurate because you could kind of predict the kind of the improvement in GPUs and things. On the one hand, on the other hand, like I don't think many people predicted that generative AI would be the kind of leading use case over more like, I don't know, what do you call it, analytical AI or whatever, just sort of like an analyzing whatever language and financial statements, right? The fact that it would actually be a creative thing is, I think, and you'd always hear, it's going to come for the truck drivers or something, right? In fact, it's coming for like the laptop.
Came for the laptop.
Came
for all of us
of like,
first.
Yeah, I mean, like product managers.
The email jobs,
like the greatest risk. I don't think many people predicted that. So that's
coming for creatives before, like robotic tasks is surprising back that long.
I mean, I think, look, there's all sorts, Martine and Sarah and Eric were just talking about it. There's all sorts of interesting AI-specific questions of like, what are the applications? Where's the value going to accrue? I'm sure you've thought a lot about this. Like, is it going to be, people talk about applications, foundation models, chips, cloud service providers, lots of interesting questions. Probably my colleagues, you and colleagues in the other verticals are more qualified to talk about. I mean, I can pontificate, but I think they're the experts.
Your pontificating is pretty good.
I think they're the experts. But what I like to sort of sometimes do is think a little orthogonally. Like, well, one thing is I always like to think about sort of second order effects of technology, right? So, and you go back and you look at the automobile, and the first order effect was you can go from point A to point B faster, right? The second order effect was highway systems and transportation and suburbs and all these other kinds of things that happened as a consequence later on. I think of crypto as being a second order effect of social media. So you go back 20 years ago and you think about, like I was thinking about social media, I was working on it, and you would say, okay, someday, people have social media and anyone in the world will be able to have a voice and share their expertise. And that was sort of the first order effect, and that happened, of course. But the second order effect is now, like crypto as an example, like if you didn't have social media, think about it, someone would come up with Bitcoin, And
then New York Times would write
New York
about
Times
it.
would say this is stupid,
Yeah,
and then
yeah.
you know Washington Post would say it's stupid, and then Financial Times would say it's stupid, and then it'd be over. Like, or maybe there'd be like a magazine or something. Like, there'd be no way to evangelize it and create a community around it the way that you know in a lot of ways. All the stuff, of course, happens through social media. I think you know the things that have happened with politics, the Trump stuff, and populism, and just all the radical changes in culture, and all these things that are going. I think we're just in the early innings of all the second-order effects of social media, right? But that's sort of interesting. So I think one question with AI is what will be the second-order effects there. Like one thing I think about, just because my interest area is like in media. So you know the first order effect of generative AI, right, is you can make obviously like an illustration, you can make videos, and obviously that stuff will improve. And I think very soon, you know, it seems like whatever in 2 years you'll have people making feature-length films.
Films, games.
Yeah, and that's what happens. But then, like an analogy I would use is like to photography. So when photography first started really kind of going mainstream, there was a lot of angst around it, you know, in the artistic community, and like, you know, artists at the time were doing representational art, and they were like, well, how, you know, what's the role of the artist in this world? And of course, what ended up happening is, at least in the high art world, they kind of moved into abstract art and away from representational art. And then, of course, photography proliferated. But then a really interesting new thing happened, right? Which is you had film, and so film was, you know, obviously requires photography, but is a new form of media that couldn't exist until you had, you know, sort of photography get to a certain level of you know, advancement, right? And so you could say that, you know, in some, like the photographs were the kind of, in my vernacular, the skeuomorphic, you know, the skeuomorphic kind of application of cameras.
Yeah.
And film was the new native form of media, right? It was a form of media that couldn't exist before. So I think one interesting question to ask with AI, with generative AI, is of course it will make it easier to create existing forms of media, but will there be new forms of media that simply couldn't have existed before? And my guess is that there will be. I don't, you know, I have hypotheses as to what they might be, but
Every previous technology
it's
wave
always,
would suggest
that's right. It's always
becomes
been the case,
native over
right?
time, but it starts with skeuomorphic. And
yeah, and then like another question you'd ask is like, what are the business models going to be in that world, right? I mean, when content is abundant, presumably the cost of content goes down, the value goes down. But you know, people still engage. You know, people like to engage with other people. They like to engage with artists. There's a human factor to it. There's, you know, community formation. Presumably, people will like, you know, if there's 100 different generative AI, you know, science fiction universes, people will probably like the universes that their friends like because there's a community aspect to it. You know, how will the money flow? How will copyright work? There's all sorts of interesting questions that you can kind of think of downstream. And I think those are all questions that in some ways crypto can address. I think at a high level, the way I think about it is, you know, obviously AI lets you create intelligent systems. What crypto is really about is not about intelligence; it's about coordination. Right? It's about collective. It's solving collective action problems and coordination problems, which is, I think of as an orthogonal set, a different set of kind of problems to solve versus intelligence. So you just take a typical problem of like, you know, well, money is obviously is a coordination problem. How do you shift value around the world? How do you get everyone to agree on certain standards? How do you do capital formation in that, you know, in the internet era? Like that's a collective action question, right? Of like, how do you get all these people together to do something? And like, but you know, arguably so is, you know, you want to build housing. Like that's probably partly an intelligence problem, partly a bunch of physical real-world problems, somewhat of regulatory problems, and some of them are kind of collective action coordination problems, right? So there's sort of a series of things that you need to make progress, and some of those things fall in the category for coordination, collective action, and that's where we think our kind of building networks on blockchains fits in.
Yeah, an economy for the internet. I mean, a couple data points on that. Like Sarah and Martine and Eric were talking about it, but you know, not all the technology waves are the same, but you know, they often rhyme, right? One commonality is just this sort of Moore's law improvement of things, right? So you talked about infrastructure on the crypto side, going from $10 to send to a penny to send. You know, in the AI side, there's been a 99% reduction in cost over the last 2 years. It looks like that will continue to happen. At the same time, you're also seeing dramatic improvements in model quality. So I'm quite optimistic for that reason. I think if you give it a set of tasks that are slightly higher order, I think the models are currently doubling their capabilities every 7 months. So
And that's only one dimension of improvement, right? Because
Yeah.
you also have the chips and
Yeah, of course. Well, chips. I mean, look, like the chips continue to get better and better, and that will help to improve the cost over time too. I think we could talk about like where value will accrue in business models and all that stuff, but clearly the chips companies are some of the best companies in the world. Or like applications and the model companies that leg up into the application layer, there's going to be a tremendous amount of value. But I think it does beg the question as you go from skeuomorphic application of these technologies into native, there probably does need to be a different economy associated with them, just number of transactions, like AI to AI payments. Talk about like what you think may happen there.
So I would expect, just as the way I look at it is in past kind of mega trends, mobile social cloud, they all kind of reinforced and intersected with each other, and I would expect the same thing here if we're right about crypto and it seems like AI is obviously happening. But I would expect all of these things to intersect. I think there's sometimes a tendency, like in the crypto world at least, for people to feel like the other sectors are kind of competitive with them or something, and we're always saying that's not the case. In fact, you have to lean into it. It also has just a thing of kind of resetting the chessboard, right? Like if you just have a whole new set of services, and now we were just talking backstage about how it seems like Google might be under threat now, just from a search perspective. You should talk about that, it's interesting. But, if that's the case, you're just gonna have like a whole, it's just sort of like a new game, right? And new incumbents are popping up, and there's an opportunity to create new architectures and new services around those.
Yeah, I mean, the Google thing we were talking about backstage, I was showing Chris a chart that our team put together that showed the volume of the AI native activity against Google queries, and they're just moving in opposite directions. It's not nearly the severity of the line on the Google direction as it is, just because of the scale. But you can see it happening. And where it's happening right now is knowledge retrieval. So it's like the lowest monetizing forms of Google's revenue model. So like, yes, they may be using query volume or losing query volume, but people still go there to search for insurance and vacation rentals and the most valuable search terms. But we're getting pretty close to the point where you can actually conduct business activity on the internet without having to go through Google. And
that will be with these agents, is there?
Yeah, agents. Yeah. Agents is such a loaded term. Our team just did, our infrastructure team just did a good podcast, which you should listen to, which is like, what is an agent? But basically, it's the ability of the AI to go conduct business on your behalf. And I think we're getting pretty close to having it be able to do that in some, at least lower level tests of things that you would do on the internet. But the problem that Google has is they have the classic innovator's dilemma. Like the search business model that they have is so profitable. It's one of the, I've talked about, it's one of the best business models of all time. Yeah. But it's hard to dislodge yourself from that because it's so good. But it's an inferior product experience. The other thing about Google is like, not only was all of the technology actually invented there, which is the craziest thing to think about. We backed Noam Chomsky and all these other guys, and they're all there.
It's just Xerox PARC all over again.
It's just Xerox PARC all over again, but with like the better business, like an even better business model attached to it. But they actually have the best models right now. Like they have the leading, the state-of-the-art models in Gemini across a bunch of different domains.
So what should they do? They should throw out search at 100-something billion in revenue?
Yeah, it's the best business out there, and I do not envy them. One of the things that we talk about a lot is like, do you back the founder-led company or do you back the company that's run by the professional manager?
Yeah.
Like it would take a very audacious move for Google to just say, I'm going to do what's needed and embrace the future.
The thing is, even then, even if they did that, even if they put in like a chat thing, the problem is the whole business model is predicated on not actually getting it's on getting the link and not the actual product, right? I mean, the whole thing is, and so
the promise they make to users is and the other side, right, is that we will deliver you the traffic.
Yeah.
So we actually should talk about that because you've written about that. You and I have talked about that.
Yeah.
But the concept of like breaking the original pact of the internet, you should talk about that and what you think some of the potential solutions for it are.
Yeah, I talk about it. I call it in my book. I have a chapter on it called like a new covenant. Essentially, the idea is that it was never explicit, but over the last 20 years or so, sort of a covenant, quote unquote, was formed between kind of distribution, which search and social, kind of the places you first go on the internet to discover. And then the content sites downstream from that. So you go and you search for a recipe, you search for a news article, and then you click through. And the basic kind of deal that evolved was that if the content site lets you kind of take a snippet and show something, in exchange for you send me some amount of traffic, right?
Yeah.
And occasionally that was broken, like with the one-boxing. So one-boxing is when Google takes the content and just puts it at the top, like they do with Wikipedia. I was on the board of Stack Overflow, which is a popular programmer Q&A site, and that was their biggest fear in life, was that instead of people clicking through and going to the website, they would just put the answer up there, right?
This famously happened with Yelp.
Yeah.
And then they've done it with travel, to shopping, but like to limited success.
Yeah, and so but in that framework, you can think of AI like ChatGPT as sort of one-boxing the whole internet, right? It's just like it gives you the answer. You don't need to click through, right? And so in that world, how does the other millions of websites, what is their business model? It was dependent on getting that flow. And you're seeing like these things like Perplexity, and I think ChatGPT too. They sometimes put links in there and stuff. But the reality is, I think that's to be nice or something, but like in the end, you don't really need that if it's a good AI. You just get the answer, right?
Yeah.
And so presumably that'll be reflected in the click-through rates and things like that. And so the question is, do you just let all of that stuff kind of atrophy and that's it? And it's just the internet's these 10 websites? Or do you have to think about a new model for those, like a new business model that doesn't involve kind of getting this flow of link traffic? And that's an interesting question that I kind of just raised. I don't really have I don't have a full answer to it, but I feel like this is the kind of thing that we should be having discussions about. And so I wrote about it and I've talked about it, hoping to trigger a discussion. It hasn't really worked. But to me, that's the kind of stuff that like are the obvious next couple of year consequence. I mean, I come to it having worked on the internet my whole career, so I think about the internet and what's going to happen to the internet. And so that to me, that's a pressing issue. And then I think it's also an issue of like that's a huge income stream, and there's a lot of jobs and small businesses. And so like, what are we thinking? Like, how will that evolve from a societal point of view? And I feel like in the AI world, like there's at least not, on Twitter at least, there's like all these people talking about, P-Doom and, Terminator stuff. And then they're talking about models. And they're sort of either really, really tactical or really like cosmological scale or something. But my sense is a lot of the actual interesting questions are sort of in the middle. They're not like Terminator coming to kill you, but more like this is clearly going to change the structure of the internet. It's going to change business models, and like how do we think through, how to respond to that, both from a business point of view, but then also like policy and other kinds of things, right?
Yeah.
Like I think the interesting questions are kind of, I would say, more middle zoom level, not cosmological, not
Yeah. I'd say you can see it initially being disrupted in websites that are knowledge-based and where the model can consume the knowledge, and
like
so it's a natural.
Chegg
is the best example, right? Which is basically it was a high-flying public company. It's a place where kids would go to get homework help and study guides and things like that, and then like overnight like got hit by a ton of bricks, and it's obviated the need for it.
Yeah.
But you would need someone to create that content in the first place, for the next thing. So I think that highlights maybe the go forward problem.
Yeah, I mean, that's a question. Like if you kill the business model that first created Stack Overflow, you're not going to get future Stack Overflows. And maybe that's an issue for the AI models, or maybe it isn't. Maybe you can just pay for it, or you can use, automated tools, or or synthetic.
I'd like to believe there's a future though, where there's like broader internet that creates.
Yeah,
stuff,
I think we want a business model for things like music and movies, and you want humans involved, and they're going to create new genres and have new ideas, and hopefully those things will then feed into AI systems, and they'll help accelerate that. But I think I believe the ultimate outcome is some kind of symbiotic relationship. There's also separately, there's sort of a human flourishing kind of question of like people want fulfilling, meaningful work, and hopefully all of these new systems and tools fit into that somehow, right? But I don't know.
I think there's some. I do think there's some risk to it, and like to your point on skeuomorphic versus native, the way the most dominant business models on the internet evolved is actually toward a new native form of advertising, right? Like we're dunking on Google, for being the incumbent, but they did create a new form of advertising. Similarly, Facebook and Instagram created, the feed-based advertisement that's, very highly targeted. So my hope would be that the AI companies, once we have the native applications, also come up with some native business model that's a different form. Maybe it's like commerce-based, or the piece that's ad-based like looks something more like an affiliate. That is like a dirty term, but like something like that actually finds a way to compensate, the website or whatever. But it's so early.
Yeah, it's interesting. I mean, because you know this better than I do, but like, there haven't been. I mean, if you look at the last unicorns, like how many are ad-based in the last 15 years? Like 2. Like the vast majority are charging. They're freemium. They're enterprise. So that's one question. It's just like, is ad-based even going to happen in the future?
I think it might go. I think it just goes in. Well, in the fullness of time, everything becomes an ad business, right? So that's like the joke in consumer internet.
Yeah.
But the best businesses in the world are ad-based, right? And they are the best businesses in the world because the users give the content, and to the user it's free, and then they're compensated via ads. And so, I think there's a question of how it will play out. Will it just be a simple subscription, or is there going to be something more, freemium that comes along? I would bet on the latter. I would bet on the latter. Yeah. But yeah, I think these go in waves. I mean, I think that's the biggest, thing. There's not a lot of new ad-based business models because there hasn't been until now much of an opportunity for startups to encroach upon consumer time spent, which is where the advertising comes from.
People are talking about, there's a whole industry around SEO, and now there's going to be a whole industry around convincing the AI model to promote your product. When you ask it what the best detergent is, like there'll be a whole industry around, infiltrating the training data so that they promote.
For those of you close to the internet, it's like we would all welcome the like gamified SEO stuff to go away. Let's talk about like market structures, if you will. Sure. And obviously these technologies they come in waves. They reinforce one another. What determines winners and losers and competitive differentiation, moats, barriers to entry, all that stuff?
Yeah, I think of most of what I've done on the investment side in my career has been sort of network businesses. Crypto's all networks. Basically everything we invest in is a network. And so I always look at the world through that lens of like, I think networks are the best. Like they're my personal favorite types of investments because of the defensibility. Once you build it, and they can be very capital efficient. A relatively small amount of money, Absolutely. You can get bigger and have defensibility there. So that's kind of lens I look at it through. I don't know how much that's happening in AI. It feels like a lot of AI doesn't have network effects, but they have brand effects and technical effects. You know much better than me. So crypto, we have that. That's we have a lot of other challenges in crypto, but one thing we have is I think once it works. Like Ethereum, Solana, Uniswap, whatever.
Bitcoin.
Once it works, there's a very clear defensibility story. Mm-hmm. So that's the good news. AI side, I'd love to hear your thoughts because you're the expert. Like, how do you build defensibility? And it seems like like right now there's 5 to 10 companies with comparable foundation models as an example.
Yeah, and then on the consumer side, one with all the traction, right? Yeah. And so right now there's no network effect. At least as far as we can see. I agree that network effects are the strongest form of a competitive moat. Chris always jokes that there's only 2 things that give you competitive differentiation in any industry: is network effects and enterprise selling. Because there's all there's all these discussions we always have is like other things like data and distribution and all these other things.
Those are the 2 things that if you just go through and count like the biggest market cap company, it tends to be those 2 things are dominant. It's not the only things, but
this is the thing that we're wrestling with right now in AI because we've now gotten to the point where there's about 1 billion monthly active users of consumer AI applications, and this has grown significantly faster than predecessor companies, Google, Facebook, TikTok, and in the case of TikTok, they actually grew through paid customer acquisition. This is so remarkable because it's effectively been all organic growth, and that's super unique in consumer. So we've gotten to this incredible scale. There's a lot of usage. There's a lot of monetization, but there is no network effect. And so how durable is that customer relationship is something that we wrestle with all the time. And I don't have a great answer for it. I think there will probably be network effects that do emerge, and they could be built around certain product features or model capabilities that create a different kind of, sort of user lock-in with the vendor, as opposed to, a user lock-in with the rest of their network, as it has been in the last social wave. But it's early. It's too early to call.
I mean, it seems like, you tell me, but it seems like the smart folks like you are shifting from thinking the value is going to be in the foundation models to value is going to be in the applications and the chips and sort of at the a barbell effect. Is that right?
Yeah, I think that it's becoming clearer to me and to us, including infrastructure group, everybody, we all sit around and talk about this stuff all the time. Clearly the chips, and then clearly the end user applications. And there is a tremendous amount of effort being exerted from a bunch of the ecosystem players to commoditize the middle of that, right? The model layer, the simple API serving. And there's different incentives for why that's the case. For the cloud companies, the ones that don't have their own models, they would like to commoditize that because they want to keep the customer power and they want that simply to be an input and something that they can sell. The application companies obviously would like to commoditize it because they want their costs to go down. And we could go vendor by vendor, but there's different incentive structures. But right now the prevailing view is simple serving via API is likely to face a tremendous amount of pressure. Obviously there's some big swing factors like open source, and how much that continues to be pushed forward to the frontier, because that's also putting a lot of pressure on the price and cost in a good way. But we're very high conviction that at the application layer you will have tremendous value. And at the chip layer, you will have tremendous value. So beyond that, it's TBD. And the crazy thing is, the applications are all so early, right? And so, there's only 10 or 20 of them that are really kind of breaking out. But the ones that have broken out in an extremely meaningful way, much faster, as Sarah said, I think, than the predecessors. So that's exciting.
Yep.
So that's the sort of network effects piece. The selling piece on the B2B side, that's very TBD. We'll see. But I think the selling software just as before is kind of always going to be the same, and it'll be the same in this wave too.
Yep.
So on the market structure stuff, one of the things that we talk about a lot in the growth fund is how much are things winner take all versus there's sort of a distribution. And one of the frameworks that we talk about all the time is this idea of the Glengarry, Glen Ross market structure, which is Glengarry, Glen Ross, Alec Baldwin comes in and he's putting on a contest and he walks in and he says, okay, we're gonna have a contest today. First prize, you get a Cadillac. Second prize, you get a set of steak knives. Third prize, you're fired. And so we joke that oftentimes technology markets follow that same sort of distribution of outcome, where the winner takes the vast majority, second place is playing for scraps, and third place is dead. I'm curious your take on that.
Yeah, we definitely, I believe, that generally, I think empirically is borne out. I think, there's nuances, how do you decide on what the category is, for example, right? And you can divide the world up in different ways. And then, of course, great founders will, move into adjacent categories. And so it's sort of more complicated. But we try to operationalize that in our investing, which is our number one kind of rule of investing is we say the best company in every credible category, right? So we are lighter on not less rigorous, but more humble on the question of which categories are the best, because we've just been, I think VCs in general and us, me in particular, I'll say, have been wrong about that, trying to predict will X be a thing, whatever, online dating and grocery delivery, and I can't tell you how many debates I've heard on all these topics, and it turned out the answer was, if a bunch of entrepreneurs are working on it and they're smart, you should probably just assume that they're probably right, and it will be a category. And then the job of the investor becomes picking the best one. And what's nice about that framework is that picking the best one is something you can actually, institutionalize and have a process around, and go meet all the competitors and have criteria and due diligence. So I believe that very much, the winner take the Glengarry kind of rule, and try and think of it as an important lesson for how we try to invest. I think it's also important from a brand point of view. We want to say, when we invest, we want the message to be this is the best company in the category. The category may or may not work, but this is the best one.
We've declared the winner. Yeah.
And that helps you recruit and partner and sort of all the kind of brand signaling around it. So I think that, and so I don't know. I believe that it has been the case with the caveats of the nuances, and I would expect it to be the case going forward. And whether it's network effects, brand, I mean, we see it play out over and over with these, like Uber and Lyft. People had all these debates. I remember all these debates, like there aren't really network effects. It shouldn't be a winner take all. And then if you look at the market caps, it is kind of winner take all. And it sort of happens again and again in these cases where people thought there wasn't some obvious reason why there'd be a winner take all. I mean, Google, people debated that for years early on. Like, there's no real network effect. It's just a brand effect. I mean, I think we probably systematically underestimate brand effects in Silicon Valley. Like, it's a meaningful thing, and that's one of the reasons it is winner take all.
Yeah.
So I very much believe in that, and I think it's important as an investor to really take that really, really seriously. And it's also just painful to be in the number 2 or 3. I will tell you, just like seeing the news articles every day and going to LP events and just talking about how
everyone asking you about the other one.
It's better to miss the category than to get the steak knives, in my view. Just miss it. Occasionally we'll miss it.
Steak knives are a tough prize. Yeah, not compete in the contest at all. Yeah, I actually think that framework that you just enumerated is one that has become really valuable inside the firm. Last thing I want to ask you is just your approach to picking founders. So, obviously,
that's a hard one.
Picking, you laid out the process, and a big part of the process, or the biggest part of the process at the early stage, is picking the founders. So what is your system and process for that?
Yeah, this is like a whole big topic, so I'll just try to be short.
We left 45 seconds.
Yeah, so, but I think, there's this concept, I think it's Peter Thiel's concept of like sort of a founder that has a secret, like an earned secret, like somebody who's worked on, like maybe they came from a AI lab or CS lab and worked on some technical thing for a long time, or they came from an industry, they came from the media business and worked for years on it and saw that there was a gap in the market. But generally, like, it's a sort of good ideas that look like bad ideas. Like, you have to, if it was obvious, it's probably being done by a big company. You have to have sort of earned your lesson and have worked in something for a long time, and just sort of the depth of knowledge. I think another thing would be sort of cross-disciplinary knowledge, because running a company is a combination of technical, product, business, and you can't separate those things, right? It's like it's a unified idea maze. We use this metaphor of an idea maze. It's a dynamic process. You're running through the maze. The world changes, and it's a maze that's it cuts across product and tech and business, and that's why you can't. The worst ones are when you sort of outsource. You have, oh, my cousin is doing. He's a web designer he's a CTO or whatever. That kind of thing. Or likewise on the business side, like it has to be an integrated whole in either the founder or the co-founders, because they have to make trade-offs across. Sometimes you have to like change the technology for a business reason. You have to be able to navigate across these different disciplines. So I think that like a lot of it too is like. Some of my better investments have been ones where I've just been deep in the space and I met with a lot of founders, and then you kind of know from the meeting a little bit, like you have the meeting and you're like, wow, that person, I've spent, like hundreds of hours on the space, and I just learned a lot in that meeting, and that person's really thought it through and they're really smart. And hopefully you sort of pre-diligence them in the sense that you've heard about them and they're referenced, and like, so it's really, there's not like a single thing, there's like many, many factors when you go into evaluating founders, and it is sort of the hardest part of venture capital, but those are a few highlights in the 40 seconds I had left.
So you can go back to one of the old blog posts about this and picking founders and the idea maze and all that stuff, and I think it's one of the clearest pieces of thinking on picking founders. So with that, thank you. I love chatting with you.
Yeah, thank you all.
All right.